any direct relations between the process which is planned and the development of capital markets again. And I think that the key issue is that we have a lack of trust within the society, to the state, first of all, and to the institutions of the state, secondly. That's why it's very difficult to predict how actually the internal investors would be ready to be involved in this process. Yeah, and it's like a question which is, I don't know what is the English form, что первое, курица или яйцо?
Yes.
First, we have dramatic lack of instruments on one hand, and we don't have the trust of people that they are ready to invest those money. So both problems are not solved at the moment. It's not a secret that 95% of the stock market is currently just state debt. Yeah, and how can we discuss the capital markets if it's just direct placements of the Ministry of Finance, and that's all? And individuals can participate now directly. It was discussed during the previous panel, I mean on the first block, and the speakers were discussing it. It's a certain risk for the banks as well, because people can prefer to buy debt of the state instead of placing deposits to the banks. Yeah. So I don't have, to summarize, I don't see any direct connection between the process which is currently taking place and the development of the capital markets. Maybe Elena has a different opinion.
I think I would agree, actually, because what is envisaged is it does not directly lead to the creation of capital markets. I think what would lead to the development of capital markets is all the efforts that are undertaken by the Securities and Exchange Commission. But also, time and trust, totally agree with you. There is lack of trust not only in the government, there is lack of trust in banks. So on the one hand, there is a lot of cash that is sitting with people. Our deposit boxes are filled with cash, and different estimates give different numbers. The challenge that we're all facing is how to put this cash back into the system. It is challenging to put it back into banks, but what is happening instead is people are investing in square meters. So I think we're going to witness another bubble in real estate, because and that's going to teach us that one needs to diversify the risks and not put all the eggs in one basket.
Sanjeev.
I think I don't have a direct understanding of how the privatization process is working in Ukraine, but just common sense dictates that you need to have a very successful privatization process for capital markets to subsequently develop. If investors see that a privatization is happening properly and money is flowing into the country, then the capital market is something which will automatically develop.
Then going to Elena's chicken and egg example, would you say that privatization could be a catalyst for capital markets and not the other way around?
I think so. I think first a successful privatization has to happen, because that creates confidence in the investors. And when you have capital coming into the country, privatization happening, good quality management coming in, management know-how from other parts of the world coming in, then a confidence is developed that yes, these businesses will prosper, they will do well, because capital is there, the management knowledge is there, and then automatically the capital markets will develop, because then people will want to put money behind those businesses. If people are not confident that there is money there and there's good management to manage those businesses and money, people will not want to put their money into those businesses.
First of all, I'd like to disagree with the unanimous conclusion, which I've heard. Of course, I haven't heard the discussion. Maybe it would have persuaded me, but in a way, I would agree that, it's not a prerequisite, to privatizations. Of course, they could happen, without developed capital markets. And if you talk about FDI, direct long-term investment, foreign direct investment, it doesn't necessarily need developed capital markets. That's true. But the developed capital market is obviously a great helper in identifying the price, first of all, and in attracting investors on a wider scale. Because without the developed capital markets, we will be limited to just trade investors, very specific, strategic investors who just want to buy specific individual assets. However, this is only through the capital markets that any company can attract equity on a sustainable level, and it is the instrument that actually shows, what the actual value of the company is. And despite the normal volatilities in the capital market, still, the economy hasn't yet developed another instrument which would have determined in a better way, the actual value of an asset.